Welcome to TradeTheNBI.com. This is John. This report is for the 27th. Let's go to the numbers. It was quite a day the other day as the market did what it usually does. And this was so expected for what we were looking at from the 50K charts, where we took a little bit of a dip. But, as soon as the dip went down there and got significant enough, attracted a lot of new buying interest. And sure enough, got all the way back up. Nothing too dramatic in the day. In fact, it was really nice because we were looking at that at our 50K, and we'll go over that one in just a second, where we were expecting the deep red to get revisited, which is why we wanted to take some gains on the initial 50K buy and utilize the 5K chart for the tick on the ES to enter, and then take some of those gains, looking for a retrace back to it because it's what that dark red candle lets us know that we can expect. And sure enough, we got just that. So there we have our radar screen numbers. Let's turn to it. We'll start with the basics of what we have to look at, and there it is, a cyan candle. So our expectation with the cyan candle would be for a higher finish. Now we are looking at a DOC though that green's heading lower. The steel has been the one supporting this along with the red. We now have a confirmed cyan above. We still haven't dipped. Well, we're right at that zero line here, negative 0.11. I mean, it's literally flat line. So we need to see a turnaround both of green and a continuation of the steel rising. It's now into the safety zone, so going to have that turn up take place pretty darn soon here to get a pop up. Again, we would want to take advantage of long entries. Well, close was at 48.50. We saw the intraday buy come much earlier. In fact, let's just go ahead and put the 50K up here. Might as well take a look at it. So we had our original buys here. We saw the pop coming up. It was a good opportunity to take those gains at the plus 10. Came all the way back down. Of course, it sold out from that at, it was just like 1 or 2 points. Not really significant enough, and then moved up and then rebought a little bit higher. We liked it intraday as new buys, and I was buying at this particular point right when this had turned around and created the sell. Not a problem. The reason being is we had higher green pivots, which were good, and then I needed to see the follow through take place to hold with it. And then when the new buys came in, it was like, okay, fine. When you saw those posts, I put them on the private Twitter feed. Oh, I had a question from members on the strategy and matching what I have here. If you go to your format strategies, you can always click that. And in this case, it's the NBI Opus 2. If you click your format, you can go to inputs. And you just need to make sure your inputs match. And of course, you can always change the number of contracts depending on what your preference is. But these are the values that should be in your inputs. And if they vary, need to make the adjustment, and that will match. That will get you closer. The next thing you would want to look at, making sure that I don't have intrabar order generation set up on this one at this particular point. And you can also look at your properties because within that, commissions per share per contract, that kind of setup can also impact it. And we limit to 2 entries. Because that's all we want in this case. You could have more if you wanted. You could put 4 or 5, and it would buy every time one of those setups came along and gave the indication. But 2 entries is usually perfect for within what I think is a good acceleration. You could go to multiples as an opportunity to diversify in time. Also, you could do multiples if you after a series of losses, because you can look at that in the performance report, the number of consecutive losses, and then either that or equity dips. There's a whole variety of ways that you don't need to complicate with having baskets of stocks and things like that, because it's not necessary. I mean, this is the ES is the basket of the S&P. It's just a matter of adjusting your time and the relevance of what the readings are, and we can see that within the DOC configuration. You can see that it did buyback double setup, one right here at 44.50 and the other at 47 now with the cyan. We like that from a long standpoint, so definitely worth taking a look at that. And then if we take a look at our 5K, you can see we ended up with the deep red, came back, didn't really fully retrace all the way down into there, but what we ended up with was the dips on the rising red. And once we broke out above the zone right here, it was worth taking that opportunity. And boom, nice move. We've had a little decent dip here to cover back some of the positive extreme retraces. One right there, and the other one right over here had already been met, so it wasn't relevant. But the deep blue right there indicated it. Retested it. We're going to have a little bit of a deep red, so we're probably going to get some gyration going on a little bit as the market feels out the situation. Don't know that it impacted our daily setup. We still have the multiple Iron Hawk as well as the other one just doing their thing, and they're going to look for the broader ATR move. So nothing to worry about. And again, that's another diversification, daily versus the intraday, and setting up the change in time related to those. And so I think some people make way too much of trying to create these pockets of diversity instead of recognizing that time is a better diversification within the broader S&P if you have obviously proper signals. NQ, potential see some negativity if you don't get continuation of this steel rising. You can see that turn around, and this is kind of normal when we reach this zone where the red is just chilling right here, still making higher pivots. So on this green pivot up there, it's going to be a definite buy in general for the market. We'll keep pointing that out. And now you're reaching an oversold here for the YM, and you're saying to me, how can it be oversold? We haven't really moved down anywhere. Well, you're seeing it. That's your clear indication as you dip back below here that you've reached an oversold category. So I know a lot of people aren't going to like hearing that because they think that, oh, it's topped out, it has to go down. No, it doesn't have to go down. And particularly the worse the economic readings are and the continuation of that malaise, and now with this whole weird immigration thing that's going on, you could see a lot more negativity that is actually going to force the Fed to be even more liberal with money, which is going to cause the market to have to continue to rise to make up for that devaluation of the dollar. So keep that in mind. TLT looking good there. Can you imagine that? People, safe haven setup. Still been rising with the red. We now have the cyan below everything, indicating that shorts not interested at this particular level. So it's a couple of weird dynamics with that. Also with the oil still at the high levels. It's easing off of the overbought that it's been in. So we're expecting a little bit of softness, not too much with the steel so deep in that safety zone. Pivot back up though, and you can get a new buy, and you're already at the highs. So new buy there is going to do what? Yeah, just propel you and just basically come into our ABM stops. Nice and easy. Moving on to, what do we got? Gold. So gold printing, it's just a minor little retrace on that, still well within the bullish construct. So weakness is something you want to buy. We know that the potential for these retraces was good, and there's still the potential for this one all the way when we get a sell signal out of it. But as it is now, you don't have a sell signal for gold, and that's because of the global turmoil potential. Is it impacting the euro in any way positive? No. And this is doing exactly as we expected it. We expect just a tiny bit of weakness associated with this. We had the decent rise. If that starts to roll over some more, if we get the steel dipping below, we might get a bit more of an exacerbated, but this seems to be kind of a locked-in point at this particular time for the euro. AIG had done a brief dip from the crossover, held up pretty well, even though despite the dip, moving below, came back, get above the ABM at that particular point. Did get reached oversold too with that move below the extreme. X continuing to float slightly higher as you get the rise up there of the both red and white have just maintained them in that white. You've seen the red stay above it the whole way, so it's just been a matter of utilizing the ABMs, and you're nowhere near any of these, so it's sort of just ho-hum boring. Nothing you can do. We like the rise that we've been seeing in there. Potential is to see some weakness out of this if we get any decay. The fact that the red moved higher means that it's overwhelming new shorts that are applying into this. So new target with the orange up 1574. So actually, just lower that one. Ooh, too far. Right about there is fine. Gives you an idea of what to look for on that. And JCP had its little recent sell-off to retrace positive extremes. Went a little further. I like it when we get these higher pivots with the green, and then also we were pivoting higher with the red. This close of the first bar right here became very attractive, and it already pre-led you to where they were headed. So when it retraced back, it was sort of like giving you a free break to jump back into that situation. Like it when it does that. We had the nice cyan candles here for WLT, which always makes it easy when you see those. And could it have been any more perfect for that? The entry there, 532, and shot up nicely. Now the deep red obviously indicates it's probably going to come back and retrace a portion of it. We have to watch where if we break down below this lower red pivot, see how that plays out going forward. But it was a nice run while it lasted. Let me take a look at some of the alert stocks for the day, because it was some wild ranges overall. Now, you know, Apple, I know I've been seeing positives. We were looking for just this very thing, the beginnings of a turn. Steel had already crossed over. We knew that that was going to create a nice buy potential. We were looking for this move of the extreme above the red line. And tiny move here. Yes, we're still in the deep red. We're going to need to see that cross significantly. Otherwise, we're probably just going to mutter along a little bit longer. And Amazon, just a flat line going across there. Potentially could pose a little more weakness here if that cyan continues to rise and we get some failing off of that. But the red is pretty much held at zero line, plus 0.41. And you can see when it does that, you're just flatlining and going across. Nothing of Baidu. It looked good from the recent pop. Now you get this dip below the steel, so we may see a little bit of pullback on there. Our potential pullbacks are the positive extreme. That was an emergency vehicle there. Baidu, still moving along though. I think though that with this dip across, you might have the potential for a little bit of weakness. Now I was talking about the positive extremes. You got one here, and you have a secondary right there for the lows. So there's just going to be a little backfill into some of the retracement from that. I don't think that's anything critical, not like a major breakdown kind of scenario. The FAS, this is a little more troubling because that is a dramatic break from a DOC setup. Yeah, we've been in the safety zone. Steel heading higher could hold off further decline on this, so we'll have to keep an eye on that. I'd be looking at intraday, particularly a rise in the extreme is what I'm going to be looking for, because if that continues to go lower, then I would expect those lows to be taken out in a significant way. Moving on to Facebook, all good with that configuration as it is there. Netflix is just doing more of the same. The problem you've got now is this combination here where we've now moved with the cyan going above. Still well below the red and white, which obviously has the lead on it now, but it's something to watch that we may see a little more softness with it. Still fine to ride that ABM going along nice and easy. PCLN, we had seen a little bit of pop. We were expecting lows to be. There we go. I accidentally pushed the little tab on there. Still expecting it to come back there. Slight rise. We broke into a newer, higher level with the red, so it may hold up for a little bit more on that. But as long as that steel is up there, potential is that you're likely to retrace back down to the lows. So you're going to have to play that with our intraday alerts and just stay active on it. It's not as rosy as some might think, but yet, you know, within that, you can still get a $15, $20 move every given day because the range can be so significant, but the bias has to be to the downside. So anytime you get a buy signal, you got to make sure if it flips to a sell to take those gains. Tesla still rising just comfortably on there. You're finally breaking down just a little bit, but with that cyan well below red, white, and that not horrible. We know we've got quite a few retraces along the road on here, but it's not ready for those yet. And Twitter continuing to just plug along. Like I said, you know, utilizing the Magenta ABM with this gentle rise going here as you just pretty much flatline. Now this should pose a significant breakout when you get this kind of pop. It started the other day with this crossover move, and you had both steel and green skyrocketing. Red has been ruling the roost throughout this entire thing. Did get into an overbought, but when you get a breakout like this, that can extend for a little while. So, but it just gives you the marker that that's going to be the retrace level. But look good. No objections to it. I will be out in Cinque Terre, I believe, on Saturday for the entire day. So for anyone renewing their indicators and that for the coming week, you would not receive anything until Sunday if you don't have it in here today. I will be sending those out a little bit later on during market hours, and so that way people have those, because Monday is the end month and don't want you to be without the fresh updates. As always, though, continue to look for me on private Twitter feed, Stock Twits. Trade well. Talk again later.